Guys, welcome back to the channel. Keith at Crypto Bullseye. And we're going to be talking about our favorite meme coin today. It is Pepe. Unfortunately, Pepe's dropped 75% from its previous high, and it's at a key level now that we need to pay attention to. Can it drop any further? Anything's possible. Remember, you look after the risk, the reward will look after itself. So this is why I'm interested in Pepe Coin now, because of how far the downside is, how you can protect yourself, and what the upside potential is if we do get this alt season soon. So we have got lots to talk about, guys, and I want to show you what happens on the higher time frame when the indicators are reset on the bottom and how that affects price action going forward. So Pepe Coin, it's currently trading at 0.0000737. So where was the top and where was the bottom, and where's the price difference? You can see this was the top up here, guys, 2858. Missed the zeros out just for ease. Where current price action is now, 738. So that is from where price is now to the upside to its previous high, which was the all-time high, 269%. So we've dropped, like I say, 75% to the downside. You can see that from here, this previous high, all the way to its low. That was 81% to its low, to where current price action is now, 74.5%. Right, so that's where we were, that's where we are. The rest's irrelevant, guys, because we're just looking at current price action, how you can take advantage of that. What's the downside to what the upside is? So we can get our risk to reward tool up, and we can see, is this going to be the low? If we bring our risk to reward up, is this going to be the low? What's the downside risk? If you're shooting for all-time highs and you're shooting for a moon, it's not a trade, guys. That is an investment, long-term to mid-term play. This is the potential low, guys, and it's significant here that we've done one thing. We've created a double bottom. Double bottom is a reversal pattern because it's coming back and it is testing the same area again. If you see what's happened from here, guys, you're creating lower lows, lower highs, lower lows, lower highs. You're in a downtrend. You've come down. The bears have hit another base. They've put in a lower low. They've come back up. You've retested, guys. This is showing strength. If we just zoom in here, this is showing strength. You've retested the previous high. Then you've come back down, you've double bottomed. They haven't managed to put in a lower low. That's showing strength. So the next thing you can look at is the breakout. Who's got momentum, the bulls or the bears? During this whole phase here, guys, the bears have had momentum. And look what's happening now for the first time. We're actually breaking out on Pepe Coin. So that's signaling, guys, one thing. We've got risk built in. We know exactly where we're wrong. And the first thing that I want to show you before we look at that is clues look left, guys, because the more touches you have, the higher the time frame, the higher the conviction. This thing goes back all the way until the breakout here on the 3rd of March 2024. So it's a strong support. It's a strong support. More importantly, it is our risk factor. How far is it to the downside? From where price is now, measure it from here, from where price is now to the downside, you've got 33% to the downside. How far to the upside if you are shooting from where price is now to the previous high, let's say 280, 268% just to the wick here, guys, as a conservative one. But you're not doing that. You're looking to play this from an investment perspective, or I'm looking to play this from an investment perspective. So how can you take advantage of it? You take advantage of it with trailing stop losses. So you've got your risk built in. And the first thing that I'm looking to do is reduce my risk even further. That's the key thing that I'm interested in, reducing my risk. So the way that I want to play it, guys, is I want to take it from here. You've got the break. You're coming back down. You might even get a retest at a lower level. And that's a might, guys. Can't bank on it. So accumulating and laddering in at low levels with an average position of, say, 3 or 4, understanding that 2 might not get a hit, and that's fine, then you can stop, stop, stop. Each time you go higher until the trend reverses, then ultimately you'll get stopped out within a profit, guys. That's what I'm looking to do on this. So I'm looking to take a small amount to start with. I'm looking to ladder my position in on here. And then I'm looking to take advantage of this, knowing that this is my risk, guys. That's what I'm willing to risk. So if I've got $1,000 and if I've got a portfolio with $1,000 in, there's the pie chart with $1,000. Sticking $1,000 of Pepe into a pie chart within crypto as your portfolio would make you guys an idiot. And this is probably not the right channel for you. So I don't mean to be harsh, guys, but it is about risk management. So if you've got a pie of 100% of your crypto portfolio, these things, and I'm not giving you any financial advice, need to be a small allocation of that pie chart. Why? Because of the risk factor. So remember, understand your risk. There's your risk, guys. There's your reward. Could go even higher, but you can protect yourself along the way by bringing your stop loss up, bringing your stop loss up each time you put in a new high, each time that you put in a new high. Because remember, the trend's your friend till the bend at the end. It will do this, guys. It will do this. Might put in a new high, might not put in a new high. But at one point, it'll come down. It'll take out the previous high or low. That'll stop you out. If you're in profit, that's great. If you're not in profit and it goes all the way down, and you're still keeping your trade and you're still keeping your existing stop loss, you're either going to get stopped out at break even, or you're going to get stopped out in a loss with that risk that you're putting in the first place. So managing your risk along with the trade, keeping an eye on these things is a good thing, guys. So if you've got a portfolio, make sure that you understand what your risk is. Got the Crypto Bullseye portfolio, guys. It's one of the only ones on YouTube that's actually in profit after this massive crash in crypto. It's not a massive amount. It was just $50 here, $50 here. But it tells you how to build a portfolio. It tells you how to keep track of a portfolio. It tells you how you can carry losers because of the winners within that diversified portfolio. So it is about structure, guys. Let me know in the comments what you think about Pepe Coin. Actually, there's one thing that I wanted to show you before we go. Each time, let's get rid of this. Each time we've hit this region here on the stochastic, this region here on the stochastic, this region here, this region here. I want to show you what happens every single time, every single time. We're back at that level now. So what happened at this time here? We've got this bounce all the way up, 1,627% to the upside. That's the first time. This is the higher time frame. This is the weekly. This is the second bounce. 389% to the upside. We're back at this exact same region again now, guys. What was the actual bounce all the way from the bottom to the upside? That was 3,565%. So what I'm saying is, on the higher time frame, these things have reset now. These things have reset. Don't put all your eggs in one basket. Make sure you allocate small amounts, ladder in your positioning, and understanding one thing, guys. If you're trying to have your average your position down and average your position down, you've give yourself, just an example, 4 allocations of $25. You've got 4 allocations of $25. You've hit one level, you've hit 2 level, great, you've averaged your position down. Then it breaks through and starts going up and higher and higher. Don't worry about the 2 allocations of 25, guys. There's thousands of cryptocurrencies out there, and other ones are doing what this thing would have done, and then you can allocate that somewhere else. Make sure that you know and understand that you can reduce your risk elsewhere by not averaging your position up and allocating your risk higher. So, like I say, guys, that was a long-winded way of saying we're back at this level, we're back at this level, we're back at this level on Pepe Coin. Make sure that you understand your risk, and I'll see you in the next one.